What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 21st of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to go about addressing two key questions that I think have been on the minds of a lot of people in the space as markets have been relatively uncertain. And the first one is obviously, are Bitcoin and cryptocurrencies dead? And outside of that as well, if they aren't dead, what's the issue that's holding back valuations? That's a really good set of questions. And I'll go ahead and jump to the gun here, guys, and just be straight with you. I don't like to drag things on, but I do hope you stick around because we'll dive a little bit deeper into this. I don't believe Bitcoin or cryptocurrencies are dead, period. And I'll talk about what I think the issue is, but I believe it's something that a lot of people either don't want to focus on or don't actually see as a legitimate concern. And I really want to spend some time to press it. So I hope you guys will give me a chance to talk about it. Outside of that as well, we do have a sponsored review of Trustology at the end of the video, following up from our previous interview. So stay tuned for that. It's going to be a good one. All right. So we can obviously see here, let's just go ahead and focus on the issue, right? Right now, markets for the most part are red, and they've been red for the last few weeks, pretty much closing down on most of the gains that we had from the China news, all the China FOMO from the news from President Xi talking about blockchain. We can see that we're just a few $1 billion above where we were, about a little over 10 billion from the lows, and it looks very well like we could possibly go down to that range again and retest that and see if we can hold $200 billion of support for crypto. And along with that as well, we can see here the Bitcoin dominance has continued to decline a little bit. But I think this article I saw this morning, and it's like no-name crypto news site, or just kind of one of the smaller medium ones. I don't mean that in a mean way, but basically catastrophe hits and crypto markets, now that they've gone below a big even number, this means that crypto is dead. It's just like when Bitcoin dipped to 7,800 last time and rallied 42%. I mean, it goes to show you the media around crypto and any industry. I mean, this is why people are so divided on things like politics nowadays. And, we don't focus on actually doing anything. We get so distracted easily because of headlines like this that pry on our emotions and pry on the weaknesses of how, we sometimes short-term analyze things rather than focusing on the long-term picture, which is what I've always proposed here on the channel above anything, right? Even if at the end of this video you disagree with me on anything, I think we all need to come to the resolution that we can't determine Bitcoin is dead because it dropped below some even number, right? Anyways, I want to go ahead and clarify again on this first question why I'm confident that Bitcoin's not dead. And it's because it's doing exactly what it needs to do in the sense of what history has shown us. We're getting very close to the halving. This is exactly the same kind of price action that we find in the same period of time towards the halving for Bitcoin, right? I was talking the other day, if you guys might remember, when we were taking a look at Willy Woo's tweet, who's a big data scientist within the crypto space, and he was saying that we're entering into the halving in a bearish formation. We're still months away. We're 6 months away. Actually about a little over 6 months away from the halving event. So we're actually completely on pace for where we need to be. We were overextended comparative to the last cycle here, right? As we have this general kind of line over time factored in here to the stock to flow model, right? We were actually overextended over it. If we take a look here, the days of profitability for Bitcoin, over 90% of its history is up. And that's right now while we've been in a relatively long short-term range to the downside here, right? 90% of Bitcoin's history, you're up on your money. And if we have anywhere close to the kind of rally we had before, that's going to boost that percentage up a few percentage points as well, getting closer to 94, 95%. Along with this as well, another simple model, the 2-year MA multiplier. We've talked about this. This is basically taking the close of the last 2 years in the green line and then multiplying that value by 5 times over time. We can see here that just like in the previous cycles, when we rode along this line, over here, for example, we rode it for a good few months, we can see we're doing the same thing. We were overextended comparative to the previous rallies, right? Price in this case, as much as the chart doesn't look very pretty, I guess, if you want to call it that, I can tell you as much as I do like to see a nice chart, it's not really what I'm worried about with Bitcoin, right? I'm more concerned, is this a good buy opportunity for me? And is the cycle for the long term still in play? None of that's really been challenged in my mind, right? Maybe you guys see it different. I'd love to hear down below in the comments, and feel free to provide a different perspective. But all these models tell me that Bitcoin price-wise doesn't look very much dead. It's probably in one of the worst positions it could be in the sense of the short term, right? So we're getting towards those exacerbated corrective periods like we had back here, where we had 30 to 40% corrections, and then we continued up higher, right? We're probably in one of the less beautiful phases of the exit of the accumulation phase into the cycle. But now that we can possibly get that idea, again, you might disagree with me. I think, though, we can have a general consensus that Bitcoin and crypto are not dead, that it is on pace. So what, if anything, is the issue with cryptocurrencies? Well, I don't think it's an issue that is so much persistent now that's affecting the here and now for Bitcoin, right? If you're worried in the sense of the kind of price action that's going to get us probably up to 20K again, that's a matter in this case of getting more people on-ramped into the community, more people using Bitcoin as a hedge against the kind of global uncertainty that we're going to find. It makes sense right now. Equities are rallying. Commodities doing actually quite poorly over the last few weeks and few months, right? So we're not seeing hedging assets do that well. Well, in this case, what is the issue? It's something that we have to look forward to, and that is going to be a year or two out from now when we do have that momentum. We are moving in the next halving event towards 15 to 20K, and we're set to break out to new highs, and the network, yet again, is clogged. Bitcoin itself and other cryptocurrencies haven't scaled, they haven't prepared, and we didn't build enough. And we didn't make these assets built so that they could actually survive that next cycle, that next wave, and actually serve not just as so much a payment network, but as a network that we can use. Because this time around, we can't have $30 to $40 fees. We can't have full blocks and actually see this go into a wave where a lot of us would like to see it go, I think. I think that it's very plausible in this next cycle we could see 80 or 100K. A massive multiple in an already really well-established market that's already had a lot of these parabolic cycles. That would be huge. And it's absolutely plausible. But it's not going to be plausible if the fees are 20 to 40 bucks. Okay? Now let me talk about this, guys. Again, this is something that I want to stress really bad, right? Right now, the fees don't look very bad, right? And we have had some small improvements to Bitcoin over the last few years. We've had SegWit implemented, which a lot of exchanges have started to integrate, right? So this has made the blocks a little bit more efficient. Outside of that as well, there is developments on the Lightning Network, but I want to go ahead and talk about these two things. First off, SegWit itself is not going to make a dent in the road when it comes to the next wave. If you're talking about going from less than 1% of global adoption in cryptocurrencies to something like 3 or 5%, which you're going to probably need to get to that 80, 100K figure to justify it to any degree, making the blocks, a little bit more effective is not going to change it. It's not. I'm sorry. Especially if we don't have everyone integrating SegWit in that sense, right? We do have a good amount of SegWit integration, right? It did make the blocks a little bit more efficient, but it's not going to prevent $30 to $50 fees in that same kind of scenario, right? So, what else do we have to turn to? Well, maybe Lightning Network in this case, right? Lightning Network itself is a pretty interesting technology, but bear in mind, it's not restricted specifically to Bitcoin. And that's actually kind of good news. You could use it on other cryptocurrencies as well. The other thing as well about Lightning Network that a lot of people don't consider is that it does take a transaction on the Bitcoin network to onboard a Lightning channel. A very important factor to take into mind, right? So there's a few issues with Lightning. If you wanted to get the entire world on Lightning Network, which maybe isn't the objective right now, then in that case, it would take us over 100 plus years from this point on to get everyone onboarding. And that's betting that there's going to be no base layer transactions, that no one's just going to use the Bitcoin network. And along with that as well, that we only need to open up one payment channel for each individual, which would not be the reality. We would need multiple payment channels to actually make Lightning work in this case, right? Because of the restriction of the Bitcoin you can use in the IOU exchange between those payment channels, right? Even if you wanted to relay through other people's channels that they might have with someone else, it makes it where you're going to likely need, for most people, multiple channels. So in this case, Lightning is a great technology, and I'm really excited to see it come through, but we've been waiting for it for quite some time, and I don't know if it's going to be the ultimate and only scaling portion of what makes Bitcoin usable. Do we raise block size? I don't know, possibly. I mean, I think it's something that we could do, and as a community, we're gonna have to debate where we want to break off, that kind of full level of decentralization, or something that might be a little more centralized to the miners in this case, who are producing the blocks. I don't know. I think that's something that we should start discussing, because I don't see anyone talking about it anymore. I don't see anyone getting excited about improving this technology. I gotta say something that really irks me. Right? I saw this article this morning. It's a new gigawatt Bitcoin mining facility in Texas. Now, part of me gets really excited about this because I love the geographical diversity of where we're getting our hashing power. That's really good news. The bad news here is that this is headline news, adding hash rate to the network, when we already have an absorbent amount of hash rate and computational power and energy consumption going into the Bitcoin network for 3 to 4 transactions a second. Really? Like, is this what we're excited about? Is this, I think this proves one thing. Bitcoin's economic model works very good for providing security to the network, but it doesn't do very well, as along with other cryptocurrencies. I'm not just pigeonholing on Bitcoin here, as a lot of other cryptocurrencies fail to do on supporting development of the currency, supporting projects that help build more actual functional utility on the crypto network. And the reason why I say this is because, quite frankly, there's one player in the space that's actually been able to do this quite well, and ironically enough, it has the same model, and that's Ethereum. Right? Ethereum's been doing really, really well as of recent. If you take a look at the DeFi movement, guys, the amount of innovation and experiments going on that could spearhead Ethereum as one of the top plays next year is absolutely just mind-boggling. I mean, if you take a look at what's going on with MakerDAO, with Synthetics, with Compound, with DYDX, what's going on with all of these different lending platforms that are using Ethereum as the backbone, there's instant clear utility. You can see that you get a fixed interest rate, or, actually, well, I'll be honest, they're variable in this case. You get variable interest rates, and no matter if they're low or high, 50 to 100 times more than what you're going to earn in your bank account for stable coins. You can make decentralized exchange trades in this case, that if you're doing relatively sized trades, you can get the same rate that you get on a spot exchange. And in some cases, pay lower fees. Along with that as well, it's settled on chain. But the biggest thing that I think is going to add value to Ethereum in this case are projects like MakerDAO that, again, are experimental, but are using Ethereum as collateral, or as I like to see it, as a store of value to generate stablecoins. So, let's see here. Do we have something like this that's valuable in Bitcoin? Well, I'll say we got Blockstream. Blockstream is a really interesting improvement on the Bitcoin network. It allows for confidential transactions. It allows for much higher scale and rapid confirmation, about 1/5 the time that it takes to get confirmed in a block if you're paying some of the highest fees on Bitcoin. So that's really good. It's good, impressive stuff. And you can issue new digital assets on top of the security, in this case, in the sidechain that's tied to Bitcoin. Problem is, outside of Tether and Liquid Bitcoin, there's no other assets right now. So, I think we need to see more kind of creative directions for the Bitcoin network to really make this the kind of spearhead of the crypto space. Bitcoin has to lead the way. And one thing I just thought about, I'll just toss something out here. Imagine if we had something like MakerDAO for Bitcoin. All right. So the general idea here, for those who may not know, MakerDAO basically has a system. It's a governance model in this case, a decentralized autonomous organization. And their first product that they built in this case was DAI, and they just recently went to multi-collateral DAI, but that's a topic for another time. And basically it was where you could use your ETH as collateral and generate a certain amount of DAI. So if I had just put it very simple, there's a certain ratio. So if I had $100 worth of ETH and I locked it up in the smart contract, I could generate $50 worth of DAI. Right? Very simple, right? I could basically generate up to half in this case of what I had. And I can go spend those DAI or whatever, and in order to redeem my original collateral, I need to return the DAI that I generated plus the stability fee. It's basically like the rate to borrow in this case, so the rate to generate DAI. And it's very similar, if you think about it, to going back to the bank, right? Back in the day, when you used to be able to do this, and exchanging dollars, IOUs, for the underlying commodity or store of value, or in this case, we're talking about in the older days, which was gold. Well, it's the same with Ethereum here. And why can't we do that with Bitcoin? Why can't we fix one of the biggest issues right now in Bitcoin, which is taking all of the great things that we have, plus having something that isn't volatile, right? So that means we can still have our underlying asset. We can have our store value in Bitcoin, but we could generate USDB, right? US dollar Bitcoin, or BUSD, but I think Binance already took BUSD, which would have been awesome for this kind of use case. But a MakerDAO for Bitcoin, right? Where you could have something similar to DAI, but it's fueled and powered by the largest store value in the cryptocurrency space. Something like this should have been done a long time ago, but I'm not too certain that Bitcoin provides the programmable framework to do this. And, we could do something that's, I think, layer 2. I think that would be really cool. Maybe we could do something that works, and it could even use Lightning Network. Who knows? But there needs to be those kind of value propositions. There needs to be that kind of update to the framework of crypto that's going to help it not only be much more utility driven, but also, as we were talking about earlier, scalable, and be able to actually prepare ourselves for this next cycle, to get people excited, right? Bitcoin could be used for payments if we had something like USDB, where we could spend Bitcoin-backed dollars in this case across the world. You have all the censorship resistance and all the abilities of Bitcoin, but you'd be able, in this case, to be able to have something that's masked to a currency that people want to accept. Let's just be real, guys. Not many people want to accept a volatile currency. Bitcoin's value is really, I think, as most of us would agree, is in being a store of value. Let's make it functionable like a store of value. Rather than just sitting there, let's make it where if you own Bitcoin, you can start going and using it in the real world, and it's going to feel just as familiar as you're used to in the traditional sense of dollars, right? And for those of you who may not want to have your exposure in dollars, you don't have to do it. You can just hold it. But you give that ability to people, right? That's the kind of thinking and the kind of stuff we're going to need for this next cycle. And I'm sorry I kind of ranted and raved. And again, I'm not pigeonholing Bitcoin. The reason why I'm being more critical in this case on Bitcoin is Bitcoin has got more resources, more of a user base, and more excitement on it alone as a project than any other in the cryptocurrency space. But I got to say, I don't see it holding on. I see a lot of complacency. We have got to start building in this space, guys. You guys, all of us have to start contributing in some way, shape, or form as much as we can to really build out this space in the long term. But I don't know. You guys might disagree with me on that. That being said, it's just a rant, a rave, a little bit of a talk on something that I think a lot of people are torn about right now. I believe in this market just as much as any other person in this space. I will dedicate my life to cryptocurrencies. I absolutely find this market fascinating. And it's imperfect because just like every other technology, we are all walking into, we're walking into an area that has never been discovered, never has been truly fully understood. We are walking into absolutely new territory, uncharted territory in this industry. And it's absolutely fascinating. I love these kind of issues, these topics of discussion, these points of controversy. But I love more than anything being critical on ourselves, because we have to be. If we want this technology to actually take off long term, we've got to get moving, and we got to get moving quick. Anyways, I've ranted on enough today, guys. Let's go ahead and dive in to this sponsored interview with Trustology. What's going on, everyone? And in today's video, I'm going to be sitting down with Alex Batlin, who is the founder of Trustology. He is also the CEO of the company at the moment, and he's going to be telling us a little bit about how they're trying to push forward revolutions in the space of custody. Alex, thank you very much for making the time. It's been a pleasure to talk to not only you from the time we've gotten to chat, but also with Maya and as well as Dom from the team. I think you guys have a lot of experience behind your back, so it's a pleasure to be here.
Absolute pleasure. Thanks for your time.
Awesome. So we've got a lot of things I want to discuss. We did a little bit of a review of the platform beforehand, and I think it's really good to kind of get a little bit of knowledge about who you guys are, because I think your solution is really impressive. But you guys come from more of a traditional background, coming and entering into the crypto space. So would you like to talk a little bit about that?
Yeah, no, I mean, my background is I started at JP Morgan, moved to Nomura, then UBS. A good few years there, ended up running innovation for UBS, looking at anything from machine learning through to mobile security, through to later on blockchain, set up the UBS Innovation Lab in London. And there we did a lot of crypto work, which was really exciting. We wrote the smart bond, which you'd probably now call security tokens. And then we also set up a project called Utility Settlement Coin. Now it's called Finality, which is really looking at tokenization of central bank money moved on to BNY Mellon and also set up Enterprise Ethereum Alliance with a bunch of other people. We all met up at DEF CON 2 and thought that would be awesome to have the kind of the openness of Ethereum, but also focusing on the enterprise space. So it's a good chunk of people now, so proud of that. And then moved on to look at crypto custody and kind of related work at BNY, and then decided to do my own thing. So got to know Joe Lubin quite well, and we kind of partnered together, started Trustology, and we started kind of writing our platform. And about a year ago, we also span out as our own independent company with two investors, to Steem Ventures and Consensus. So really proud of and very grateful for having the backers we have. And I think partially the reason we have the good backers is because we're a bunch of geeks who love crypto, love DeFi. At the same time, we've gone through the ringer working in large banks, so we understand scale, security, performance, the need for resiliency, and how to comply with regulations. So we're trying to really bring those kind of two worlds together to create something special, and we really focus on what we call people, process, and technology, because we believe that all three have to come together in order to do something special.
Absolutely. Well, I love that you mentioned you've been in the space for a while, tokenizing assets before even security tokens were much of a topic. And along with that, focusing on trying to make sure that we can have a proper custodial solution when we enter in this really exciting next phase of the crypto space, which is DeFi, being able to access lending pools, decentralized exchanges, and pretty much decentralized liquidity pools, which is really exciting. So I'm very curious, Alex, taking all this experience, you obviously mentioned you have Joseph Lubin on, who's a very accredited individual in the crypto space. I'm curious to see how you guys are doing this. So I've obviously taken a look at the product and everything, and talking about the kind of solutions you provide. You not only provide individual-based solutions, so you do provide accounts basically where people can individually manage their keys and use industry-level kind of techniques to keep it secure and and also controlled on a mobile device. But along with that as well, you guys have been looking towards enterprise solutions as well, and I think you take that good measure of bringing in the expectations from the regulatory and financial sector, but also, making it something that's easy to use.
No, absolutely. I'm glad you picked that point now. So actually, the journey we started on was we wanted to create a platform, a key management and transaction management solution, really for large banks. Now, large banks, they need to have extreme security, extreme resilience, high availability, performance, and very cheap operating costs. And then kind of as we progress into faster networks, the cold storage and anonymous accounts do not scale out. It's too expensive to operate, it's too slow, and there's no external auditability. You back to reconciliation, which isn't great. So we wanted to build a very kind of crypto native solution where we really just manage your keys and your transactions. So we built a platform that's hot and it's in real time. It's always segregated accounts because we don't manage your assets, we manage your keys. We custody your keys, and we also kind of make sure that any transaction is sent through our system complies with KYC, AML, whitelist, blacklist controls, and all that kind of stuff. So we built that platform, but it was really quite revolutionary. So all the banks said, look, we love this, but can we insure this? So we went to the insurance market, and the insurance market came back and said, well, you need to show us we can't insure technology, we insure services. So we said, okay. So we spun up a service, and initially we wanted to have an MVP, so we did it for individuals. So we spun up our UK, a service for individuals on the back of this platform. And actually, we're now starting to get more and more traction from individuals, especially kind of high net worth, but everyone, because right now we actually can operate it really cheap because of the way we built it. So we can offer really good pricing with extreme security and scalability in real time. So pretty popular product. We're proud of that. At the same time, the crypto funds started approaching us and saying, we love this, but we need kind of multi-sig and whitelists and all that kind of stuff. And we said, well, yeah, that's how we've designed it. And they're like, well, we don't really necessarily want for the banks to install this. Can you just give us this service direct? You already do so for individuals. So we launched a business account. So we have an individual account where individuals on board, and business accounts where businesses on board with the employees, and then also we add multi-sig controls, we add whitelist and so on. So that's been great. But then recently, a lot more people started saying to us, well, because you're real time and you can control all this, can we also have you supporting DeFi? Because we're perfectly positioned for that. So we said, yeah, of course we can. So recently we've launched our MetaMask integration. So you can have all the convenience of being able to work with any project out there, whether it's just moving Ether through MetaMask, whether it's moving ERC20 tokens or using compound finance, MakerDAO, you name it, but you want to do it in a secure way. So instead of using the browser keys in MetaMask, you want to do the keys in our custody. And if you lose your keys, you want to recover it. And we build that. So essentially, with the MetaMask integration, you do a normal flow, but at the point when MetaMask prompts you to sign with a browser key, we instead push a notification to our mobile app where you sign it on a mobile device, which sends the request back to our service. We re-sign it with the keys in a custody and submit it. So even if you lose your phone, that's okay. We'll remap the kind of authorizing keys to a new phone, but you never need to worry about losing your assets on chain because kind of the real keys are always under our custody. But we pass through transactions. And we also apply KYC checks, AML checks, whitelist and blacklist. And why is that important? Because sometimes crypto funds may need to have segregation duties. So they want to make sure that the custodian is able to allow or disallow certain smart contracts. So you might say, we don't want you to go and use a derivative smart contract, but we want you to use a kind of a swap exchange contract. So we can manage that. They also want to guarantee that funds can only move to pre-approved addresses, the whitelist, so we can do that. They want it to be all secured, and they might want to also insist that there's multi-sig on high-value transactions, which again we can support. So really, it's a regulated, controlled walled garden around any activity you perform on chain. So I think that's going to be really important because right now there's a lot of hype around DeFi. I'm super excited about it, but we've seen some of the bigger crypto funds not being able to move into the space because of the lack of kind of independent custodian that can sign any transaction, and because of the lack of KYC and AML. And actually, we can bring both of those to the mix and really unlock the DeFi space.
Yeah, I think you honestly have kind of considered the whole formula here, Alex. Going back to a point you made earlier, I don't think we're going to live in a world where everyone's going to be using a hardware wallet as much as we envision that. I think in the United States, it seems like a practical solution where maybe people who are investing in crypto have $1,000, $10,000 above. But I mean, to think about it, for people, in developing countries and the global audience we're trying to reach, not to mention being able to have an easy interface into DeFi, I still think we haven't seen that just yet, where again, you're not dealing with managing excessive amounts of private keys in the process. So I think it's awesome. You guys have obviously made it much simpler, but you've also focused on the regulatory side, making sure that users don't have to worry about excessive complexities with meeting compliance with regulators, both for the individual side and also the business side.
And actually, it's interesting, we're now starting to talk to a number of payment providers. Why? Because they want to be able to provision thousands of wallets and be able to recommission thousands of wallets for both individuals and employees. Because we effectively have a programmable wallet solution, we can now en masse create keys assigned to individuals and withdraw them. So that's a really exciting another avenue that we've started getting traction on as well.
That's exciting, Alex. I'm excited to see these different avenues you've been going down. And just to get an idea, obviously you have the individual and business focus. Where has the majority of the demand come in? Like where have you found that the product really serves a fit? I know you had mentioned crypto funds before. Is that kind of the major target market?
Yeah, we're working a lot with the crypto funds. So I think some of this we are absolutely required for crypto funds because in most cases they need an independent custodian, KYC and AML. So there we're absolutely naturally required. But also we're starting to see quite a lot of individuals because roughly after 10,000 net asset value on key, people start to get worried. Mm-hmm. And they're uncomfortable signing something with just keys in the browser. They want a secure solution that's insured. And that's what we are. We have insurance. It's been brokered by Aon. So it's very reputable insurance companies. So not only do you get the security that we provide, but the reassurance of having a major insurance player behind us as well. So I think for individuals who are right now actually more dominant in the DeFi space, want to do more, but we're worried to put too much funds in that space because of lack of security and insurance. Again, we're unlocking that customer segments. We're seeing traction on both sides.
That's awesome, Alex. Well, just to let people know, I'll obviously put all the links down below, for not only engaging and testing out the application. I know there's the free version that people can try out. They can do a certain amount of transactions, get a feel for it. And I think that's awesome. I think it's going to bring a lot of users to your guys' platform because I love when apps do that. But you also have a service as well with extra additional features and stuff. So outside of that link to the app and stuff, which I'll leave down below, is there any other places people can find more info about you or get involved?
Our website, and then kind of what we'll be doing very soon is publishing our APIs, because actually what you get to install is one view of what we do. It's the sign-in device, and it's this kind of an easy way to view your balances and transactions for individuals or businesses. But we'll be soon launching also kind of the web kind of capability for the crypto funds to add and view stuff on a larger display, and easier management for kind of more institutional use cases. But also the real power under the hood is the set of programmable wallets and programmable kind of transaction controls. We call it the programmable custodian. So we'll be publishing our APIs. Our first step was to publish the MetaMask integration, which starts to demonstrate the power of our APIs. And we'll be opening those APIs very shortly. Check out our website to introduce effectively our API set. So as I said, folks like who might be looking at payments, etc., they want to have large-scale management of millions of key wallets. We can provide that. So we'll be doing that. But also, just one of the interesting things we kind of recently done as well, people are, especially individuals who are keen to use our service, they say, look, I don't want to go to an exchange to buy my Ether or Bitcoin. I want to be able to top up straight from your phone. So we've recently added a small capability that's an integration with MoonPay. MoonPay is an awesome little product. It allows us to plug it into our wallet, and then from the wallet, you can say buy Ether or buy some of your tokens. We launched MoonPay. We pre-configure all the destination addresses to be our kind of our custodial wallet transactions. We also kind of passport identity, which makes for a really nice user interface and experience. And then once you've purchased your crypto for fiat and a simple pay with credit card, it's delivered into your wallet. So again, people are really excited about it because what we're trying to do is create that effectively, I call it almost, what we're trying to do is create the browser to be the equivalent, the wallet to be the equivalent of the web browser for the internet.
Right. Just an all-in-one platform. Yeah, I mean, I think that's what we're seeing with a lot of the wallets and interfaces is not having it where it's just send and receive functionality. I've been kind of preaching this for a while where we need an exchange, we need to have the exchange functionality, traditional wallet functionality, and a whole new plethora of things that you can do now. And I think it's all these projects that are coming out of the DeFi movement really being integrated straight into it all in one. So, Alex, I think you've got 100%. Yeah, I think you've got 100% proper focus on this, and you've also taken a lot of the outside elements that I think so many projects haven't, with insurance, with compliance, and just streamlining it all in the process. So, Alex, I'm fascinated what you guys are doing. I'm really interested to hear about how you guys are continuing to expand the wallet, and I know for certain we have to have you back on sometime soon to talk more about it. But, Alex, this is fascinating. Thank you very much for all that you're doing for the space, and I can't wait to see, hopefully, how this will expand more user adoption, both on the institutional and retail side. I think it's a huge problem that's being solved by you guys, so props to you.
Awesome. Thanks for that.